Of course, there was a teaser in the budget also where the finance minister talked about a new income tax bill, and she said that a lot of clarifications will come through in that bill. The language will be clearer for you to understand, and the content of that bill will effectively halve. But there's also another data point that we have for you that will essentially measure out how much your tax outgo will reduce. New tax regime versus new tax regime. If we can, let's pull that up, because, and we're looking at income above 12 lakh, right? So if you can read that on the screen, if you are earning 13 lakh rupees, then effectively compared with the old new tax regime, you are saving 25,000 rupees. That increases to 35,000 rupees at 15 lakh, increases to 50,000 rupees at 16 lakh, it increases to 90,000 rupees at 20 lakh, and 1.1 lakh rupees and beyond. So 1.1 lakh rupees on 24 lakh and beyond, which is a very significant saving. Wouldn't you agree?
No, absolutely. And as you know, both of you rightly said that without dismantling the old regime, they have dismantled, you know, and once you are above 20 lakhs bracket, for you, the old regime will not look so good, because you have to make compulsory investments, you have to confine yourself to all the realms and pay higher surcharge. Might as well go under the new regime. You have your own freedom of investment, and then sort of you are covered by this new regime. So obviously, yes.
Let's talk about the deductions that are currently available, just to elucidate the point further. In the new tax regime, Mayur, you still have that standard deduction for salaried individuals to the extent of 75,000 rupees. And there's also NPS, right? Which is available?
Yes, NPS is available.
Yeah. So can you explain that?
Yeah. So what happens is that when you contribute towards the national pension scheme of up to 10% of your basic salary, or 10% of your total income, which now last year they have raised it to 14% under certain circumstances, then that would be allowed as a deductions, which continues to be allowed in the new regime as well. Because, and the reason for that is that they want to create social security environment self-funded rather than funded by the government. So that's the reason why they are doing it in that particular fashion, and they are allowing it. As far as standard deduction is concerned, long back they had introduced standard deductions for new regime, which was then enhanced to 75,000 if you are going for new regime, otherwise it was less.
Yes.
So that's where, you know, they tried to encourage, and now they are kind of putting more stress on the new regime than old regime.
Certainly. So just to drive home that point, and you were making that, people in the slightly higher income ranges, they don't have to make those necessary investments for ATC deductions. They don't need to necessarily put money. And so what happens then effectively is the tax saving investments that were usually saved to the end of the year, and you will know this, and a lot of chartered accountants will breathe a sigh of relief saying we don't have to do anything towards the end of the year. That goes out of the window.
Absolutely. But before I come to that point, I think one important point to note in this slabs, and where there is slightly an ambiguity, that let's take two examples. You have 10 lakhs of salary income, you have 2 lakhs of capital gains.
Yes, this is important.
And you have 10 lakhs of salary income and you have 5 lakhs of capital gain. Now, in the second example, it's very clear that you have to pay on 5 lakhs capital gains tax. But obviously, because you have crossed the threshold, so on 10 lakhs also you will end up paying tax. It's not that your 10 lakhs remains protected. But the issue that comes in 10 plus 2 example is that whether 2 lakhs should really get taxed as capital gains, and that clarity is not there. So it's kind of an open thing, and that kind of leaves a room, but of course it doesn't impact people at large.